What's up, everybody? Erik here. I am super stoked. I got Tom Sosnoff from tastytrade. He's the guy that actually built or led the development of this software that's in the background here that I still use now, which is Thinkorswim. So first off, Tom, thank you so much for taking some time to come hang out and talk trading with us. We really appreciate your time.
Sure. Looking forward to it.
Yeah. So like I was telling you right before we started, I started trading options really young. I was super fortunate to come across it. And it was really like 2008, not a lot of great resources out there. And then I came across you guys when I was in college, and I reached out to you a few times to chat with you. And something that always stuck out to me about your approach to trading and investing is you made it feel possible. You made it feel approachable to me. You would talk about very advanced concepts, but you made it so that it felt like somebody like me who didn't really know anything that I could potentially dip my toe in. How did you develop that ability to translate really complex topics, but make it approachable to such a large number of people? It's a personal question, but I'm very curious the answer.
Well, it's funny you put it that way because a lot of times I like to describe my own journey in this business and a lot of the crazy success that we've had at different points about, and tie it back into our ability to make what we say is complex topics simple. In fact, I just went on the road and did a couple of college PhD and undergrad lectures. And the topic of the lecture was specifically for PhD students, which were not necessarily finance PhD students, was making complex topics simple and how to monetize that and turn it into some kind of business because a lot of really smart people have a really difficult time, and again, it's not about dumbing things down. It's really about being able to tell a story. Yeah. One of the keys to building a successful business is being able to articulate what you're doing and being able to make it relatable to everybody so that you're not talking in some kind of language that nobody really understands. We make a general assumption up front, hey, everybody's smart, but make it something that, hey, it's fun, it's approachable, it's easy to understand. You can tie everything together. It's logical, that kind of stuff.
But it seems like you have found a really interesting balance between highlighting the stuff that really matters and not wasting as much time on those other more esoteric concepts. I'm really wondering, how did you start trying to teach people about options? Like, how that doesn't seem like a huge potential marketplace. So why options? Why not just stock trading? Why not something else?
Well, two things. First thing is, you're a little young to remember Arthur Ashe, but he's a great tennis player. And I saw him do an interview once, and I'll never forget. He said during the interview, that somebody said to him, because how do you went 5 sets and you look so fresh at the end of 5 sets, and you kind of had more energy at the end than your opponent. And he goes, hey, I don't go after the balls I can't get. and you know what, that always kind of stuck with me, because in business, I kind of feel like I don't go after the balls I can't get. You know what I'm saying?
Right.
I kind of handle the things that I can, that I know I can do. So I think that's a big part of it. I got into options originally because when I got out of college, we were in the middle of a recession. It was 1979, and it was pretty hard to get a job. And I was a political science major, and the best interview I had was with a financial firm, and they offered me a job somehow, which back then was like almost unheard of on your first interview, because it was really hard to get good jobs. And this was a job on Wall Street, and I was living in New York, and I was like, done, I'll take it. And I didn't think I would stay there for 40 some odd years, in the industry. But I learned options because I hung around when I first got this job with a bunch of young they were like, everybody liked options, and I didn't know anything about them. It was the first time I've ever seen them, and I learned them pretty quick. And I just decided that if I was going to really do something in this space, I had to quit the job that I wanted so bad and go to Chicago, where I'd never been before, and go to the exchange where the action was.
Which leads to two questions. You just answered one of them, which is, why have you stayed in Chicago? Because I've been there twice, and I'm from New York originally. I went to school in Rochester, but I always felt like the winter I went there to Chicago during the winter, and I felt like your guys' winter just straight up disrespected me and my jacket, because I was used to the cold, but that was a different kind of cold.
The I felt, yeah, it was weird. Like, I had never, you ever see those, you remember those New Yorker cartoons where like, we're pretty much, if you grew up in New York, the end of the world was like at the end of the East River, like once you crossed over, the George Washington Bridge or the Tappan Zee, it was pretty much, or the Triborough, that was the end, like that's where the United States stopped.
Right.
So I really had never been west of anything. Like I grew up on the East Coast. If I went on vacation, I went north to ski in the East Coast, or went to Cape. I never went anywhere but where you could drive on the East Coast. So I'd never been west. And when the opportunity came up to go to Chicago, I just fell in love with the city. To this day, I think it's one of the best cities in the world. I think it's the best city in America. Like it's crazy, beautiful city, and with amazing architecture, with everything you have in like New York, but you can drive, it's livable. I have a house in the city, it's like, I've just fallen in love with this city. It's safe. It's just, it gets a bad rap sometimes because of the weather and because of some of the crime, but I don't think, I get used to it.
Right. Yeah. It's not necessarily representative of the whole place.
I've been here now 2/3 of my life. So, it's just, and this is where, back when I started, Chicago was the last frontier of what I would call like kind of true capitalism, in the sense that, where else could you go with, 20 or 25 grand and, lease a seat and hopefully, make it in this business. I mean, we didn't have entrepreneurship then, and it wasn't like, there was no word like that. And so we would, this was, to me, the last frontier of real free market capitalism. And I just happened to get lucky. I stuck around.
How did you develop this relationship with risk? Like you just said, taking 25 G's, going to Chicago, and just let's see how it goes. That seems insane to me, but like, you're obviously comfortable with risk. How did that relationship build? How did you create that?
I know it's going to sound a little crazy, but I mean, I've obviously developed over the years, even a different appetite for risks and things like that. But the reality is that I think some people are, maybe it's just part of their DNA almost, like I was definitely somebody that was open to, unlimited risk. I learned over time to be a little bit more measured about risk. I'm a risk freak. And now I know there's a difference between like somebody that jumps out of an airplane without a parachute, and that kind of risk, and the kind of risk that I'm talking about. But I'm willing to roll the dice constantly. I rolled the dice when I was 20, I rolled the dice when I'm 40, 50, when we built Thinkorswim, we rolled the dice with everything we had. When we built Tasty, we rolled the dice with everything we had. I don't hold back, and every opportunity to take risk. And this is one of the things I think that, one of the things that your generation is, you're right, your generation has been relatively risk averse. I mean, both my kids are wrapped around your age. One's 30, one's 33. So I'm kind of I'm familiar with, and I work with both of them. So I'm familiar with, your wheelhouse. And I think that generation needs to learn risk better. And it's challenging for them. And it's challenging for a lot of people. But to me, learning how to A, appreciate risk, B, how to assess risk, and C, how to deal with risk when it works and when it fails are the keys to long-term wealth creation and success.
Do you think that there's something to be said about, traders being able to mentally partition the capital that they're trading with, or how do you view that relationship with trading capital?
I am able to partition it a bit, but I'm in a situation where obviously I have the ability to do that because I have the means to do that. But I started in this business where, so I, from the day I got to Chicago when I was 23 years old, 24 years old, till now, so 40 years later, I essentially have been eating what I kill. Like I've only had 2 jobs in my life that I've got a paycheck. Both of them were when we were bought out. So for the first 20 some odd years of my career, I worked for myself. I was an independent market maker. And I had to learn how to, of the capital we had, when I say we, I mean the capital I made, I had to learn how to, protect the franchise, so to speak. And as I made money, I had to put a little bit away because, I wanted to do things like, build a house, have a family, that kind of thing. And on the other hand, I needed capital to grow my business because as a market maker, as a trader, those with more capital can do more things. And I had to really learn how to do both those. And then throughout the years, when we made investments and, like in a story I love to tell is, 20 years, almost 20 years after I started, so it was 1999, so it's 18 or 19 years, when we built Thinkorswim, Scott Sheridan and I, who did we were partners, and we founded Thinkorswim together. We took all the money we had made over the past 19 years and didn't even tell our wives or anybody. And we basically took every dime we made and built Thinkorswim. It was millions of dollars, but it was all the money we had. And we rolled every penny of it into Thinkorswim. So we didn't hold back one, we raised some capital after that, but initially, we put up 100% of the capital ourselves and built the whole thing, with our own money. And then we raised capital, and at first it was hard to raise capital in the middle of a meltdown in 2000, when the markets were crashing. But then when we turned around and we built Tasty, we did the exact same thing. This time we didn't roll, we didn't take all our money, but we funded the whole thing and rolled the dice and blah blah blah. And I think it's really important in life that every time you have an opportunity to take risk, you should take it. And those people that tell other people, hey, you know what, you shouldn't do that, it's too risky, or you shouldn't do that, it's it's not smart or anything like that, I don't believe in that at all. I mean, obviously there's some things like, you shouldn't go out and spend $1 million on lottery tickets because that's stupid. But if you have the ability to assess risk and bet on yourself and your confidence, and you have to do it. I don't even like the alternative. There's no alternative for me. I'm 100% all in. And that's even to this day. Like my wife will still say to me today, she goes, she'll be like, what the fuck is wrong with you? Like, why are you still doing this? Like, why are you, why are you risking $1 million in this, or 2 million? Like, what are you thinking? Like, what are you doing? And I'm like, what do you mean? This is who I am. Like, don't, and she's like, whatever, and she's like, why are you still doing this? I'm like, that's what I do.
It's really interesting, and as you can tell, my dog Thor is also very interested in your take on risk. He's wearing his tuxedo, but one of the things that really drew me to what you talk about is I would watch some of your guys' live streams, and you would have trades that weren't going in your favor, and you never got wound up about it. It was never a huge deal. It was always like very emotionally regulated. And that appealed to me because in the military, in the Marine Corps specifically, we teach a lot of that, because the last thing you want is if shit is hitting the fan for the person who's supposed to be leading everybody to be losing their shit. It's not a great example. Nothing good happens.
Of course. Yeah.
So how, for retail traders that are notoriously emotionally tied to their trades, obviously you're wired differently. They're also wired differently. How do you think they could potentially think about those trades that are not going well to mentally keep them kind of regulated so that they're not going through this emotional roller coaster? As the trade's up, they're elated. As the trade's down, they're depressed.
Well, one of the things that we do, I think, really well here at Tasty is we hammer home the concept of there is no real defense mechanism in trading other than keeping your size, in check. And so one of the things that I think we've done probably better than anybody in the world is really convince people that if you trade small, there's a lot less that you have to worry about, like when things go bad. So we're proactive in the sense of getting people to trade reasonable trade size, which I think protects them against kind of that really ugly, that ugly scenario. Now, that doesn't mean that there's not tons of ugly scenarios. We get that. That's trading. But we also try to bring a very logical approach to, the way we adjust positions, the way we reduce size or roll out. I mean, like I feel like living in the option world, it's much more strategic, and it's got a lot more flexibility or optionality when things go wrong, as opposed to a very black and white position like a stock position or a futures position. I feel like option positions have a lot more choices when things go wrong. So that's one of the things we like about it. It's just more strategic.
Got it. I think that makes a lot of sense. And I think one of the things you brought up was the idea of, position management. And I still remember there was a series that you did for a while. I want to say it was with your daughter, but it was like essentially teaching her to trade.
Yeah. Where do I start with my daughter Case? I did it for like 2 years.
Love that. And that was actually one of the things, and I purposely wanted to bring that up to, again, like I believe in giving people like props when I can. And that was a really interesting series because, again, I saw you take something like options trading, which essentially the pool is as deep as you want it to be. You can go really, really deep into volatility jump models and so on and so forth if you're so inclined. But you kept the information very pertinent to what you need to trade and slowly getting further into detail. I'm very curious, if you were to teach that same series again with your daughter or with somebody else, how would the way you teach that change, since that was about a decade ago? Really, what I'm hinting at here is starting to dip my toe into picking your brain on the evolution of options markets from essentially a decade ago to now.
Well, over the last, I mean, I'm basically a junkie, an option junkie. And I've been in this business now, like I said, over 4 decades. I probably made more trades than anybody else alive. I mean, good and bad, both. I probably have more losers than anybody ever, and I probably have more winners. And I probably made more trades. I mean, to this day, I still average almost 100 trades a day. And so, yeah, so I don't I'm true junkie. And I use my own technology, I use the same technology our customers use, same rates, everything. So I'm one of the few CEOs in this business, or one of the few, people that build this stuff and runs that actually, uses all the same markets, trades all the same stuff, all over the place. So I basically practice what I preach. I would do things differently today than I did with Case, because we've learned a lot over the last, 6 or 7 years. And she's still, she's our chief compliance officer. She's amazing. She works her butt off for this business, but, and I'm glad she learned it. But I feel like I've gotten better at being able to, explain mechanical optimization when it comes to trading. I feel like I've gotten better at kind of, I'm better at articulating some of the things that I might have stumbled on, 10 years ago, just trying to kind of explain what we do. I've never looked at myself as as a great teacher because I don't really I don't like to teach that much, but I've looked at myself as a good storyteller and as a good kind of somebody that has not necessarily a good feel for the markets, but somebody that's fully engaged in the markets that can talk about it. I mean, I've basically watched every single tick in the S&Ps for 42 years. Like nobody has sat here, which is something that I should probably be like insanely scary of, because it shows that I don't have much else to my existence. Like, I haven't taken a vacation in 3 years. I can afford to. I just haven't. I'm crazy that way.
It's interesting. And, one of the things that you said there that I thought I definitely want to mention, though, that one of the things you did, I think, a killer job when you were teaching Case was she embodied a lot of the hesitation that a lot of us had. And I still remember there was a couple episodes where you were just like, just put the trade on, just click the button.
Yeah.
Just
well, she's not. So we have a lot of similar characteristics, but one of the things that she did not get from me was an appetite for risk. And and she's very detailed and very, like, she wants to make sure she's doing the right thing.
Right.
And like, I'm okay with making a mistake. She is not.
Right.
And it really gets her frustrated. And so she was very frustrated by the just make the trade, like that was the worst thing you can tell somebody that's as detailed. Like, she's one of these people that reads the instructions to anything. Like, I don't even look at instructions. I'm like, I don't need to stick in instructions. I can figure this out. And I might sit there for 2 hours, and butcher it. And she might do it in 15 minutes after reading all the instructions, but she's an instruction reader and I'm not, so that's kind of the difference.
How do you view the aptitude and the skill development of a retail trader over a decade ago, specifically on what skills do you think that they just are knocking out of the park now compared to what you were seeing a while ago?
Well, the difference is that there is there's just a, and again, Tasty is pretty unique in the sense that we don't do things the way everybody else does things. And we've changed, what we believe is the important, we've changed content and the context of content so that we can give people a very different perspective. Like, when I first got in the retail business, when we built Toss, 20 some odd years ago, the first thing everybody wanted from us was, hey, we can't trade without this charting study or that charting study. We can't trade without this piece of, information or news or whatever it is. And I think that's what's happened now is we don't get that at all. Now we get like crazy complex questions, about implied volatility, expected move, duration, rolling, like everything, all of the.
I think you might have muted. I don't know if it's on me or you. Yeah, I can't hear you now.
Can you hear me now?
Yep, gotcha.
Okay, yeah, it's weird. Sometimes my system switches off.
Back at it.
So I feel like I'm not sure where I left off, but what I was saying was that in the last 20 years, the level of the change in content that we deliver went from subjective to quantitative, and it has changed the way people look at strategic finance. We are now pure product indifferent. 20 years ago, people go, I trade stocks. Somebody else will go, I trade futures. Somebody else will say, I trade options. Now we are completely product indifferent and we're strategically indifferent. We don't care.
I feel like a lot of retail traders, they learn options and then they start going down a very typical progression of strategies. If you were to think of a handful of strategies that you think retail traders should prioritize, like a new retail trader, what kind of strategies do you think they should start looking at?
Well, I don't think it's that easy. I think it really depends on the market environment. And, like right now, if you said, hey, what should people look at? I think it might be different if we're trading, near, let's say 52-week lows or things like that, or high implied volatility, than maybe if the market was on the other side and was near 52-week highs and I thought the market was frothy. But generally speaking, we try to teach people to use any strategy that will improve basis. And that is, that's important to me. Improving basis.
So when you think about the evolution of your guys's homework that you do, because you come out with different statistical data points on all kinds of different aspects of the market, when you think for retail traders and they look at a market now, and a lot of retail, very cash heavy, a lot of them are very scared. For the retail traders out there looking to deploy capital now,
I think
translating the way that you view the current markets and how people might choose to strategize off of that.
I think retail traders are scared right now in general across the board, because I think that the world of financial media and the whether that means cable or whether that means print, whatever it is, they have some inherent conflicts in their message. And their message is essentially to get people scared, because fear sells. And I personally, it drives me crazy, because I think that's complete bullshit. I think that the fear is actually fear equals opportunity to me. And fear is generally almost always overpriced. Complacency is undervalued and fear is overvalued. And so I feel like the best time and the best opportunities are when market is most fearful. And I think that's where we are right now. So right now at this point, I'm much more into telling people, hey, you should be, taking risk and utilizing capital than anything else.
Well, it's on brand for your typical approach to risk. So I'm very consistent. What do you think about the way bonds have been behaving this year, specifically as it pertains to, just the typical relationship with equities? And bonds really aren't acting as a risk off asset when the markets are obviously contracting. It seems a bit interesting, but I've done a bit of homework on it myself to see how many times in history we've had these kind of movements, stuff like that. But obviously you have way more qualitative information around that. So I would love your perspective on just the way the bond market is reacting right now. What does that mean to you?
The bond market is reacting to me it's overdone. I think it's overdone. I think the bonds, and I'm almost always a bond bear. So it's really hard for me to find me, for 20 straight years, I've been a bond bear. And now all of a sudden, I flipped to being long bonds. I think they're the second most oversold asset class. I would argue the first is global currencies versus the US dollar, and second is bonds. I don't think stocks are anywhere close to as oversold as bonds are at this point. So bonds haven't had an uptick in, in months. And at this point, where we are right now is bonds are reacting emotionally to the Fed trying to play catch up. And I think the Fed is basically irrelevant. And so I just feel like the bonds are, from a pot odds perspective, the bonds are one of the most, well, they're definitely the most liquid, interesting play in the world. And they're probably the second best pot odds play. And there's a lot more to do in the bonds than there is to do in the currencies. So yeah, my answer here is I actually, for one of the rare times in my entire career, I'm long bonds.
So you said they're the second best pot odds, obviously piqued my interest. Is the number one pot odds in your world the global currencies, or is it something else?
No, it's global currencies. I think the number one in my mind, right at this point, number one, as far as just being purely overbought, is the U.S. dollar. I don't get the I don't get the I just can't believe people are still buying US dollars at these levels relative to all the other currencies in the world. I don't for there's no way I understand it at all. At
And
these
from a
levels, I just don't get the risk reward. It doesn't make any sense.
to me, it just seems like we're at a problem here where the dollar has become very, very strong and a lot of debt is serviced in US dollars. And I'm thinking a lot of emerging markets might not be able to continue to service the debt. I'm curious if you've seen anything like this or what you think about what we're seeing now.
Well, I think I don't know if I mean, the public answer would be yes. It's going to be incredibly difficult, especially for emerging markets, to continue to fight, crashing currencies in the face of a crazy strong dollar. So the simple answer there is yes. That presents a problem. I don't know. I think first of all, there's a couple things. Most importantly is, I think that this sends what's happened to the dollar this year sends a very important message to the rest of the world about the need for having market structure that provides a vehicle for across the board liquidity and or derivatives of that liquidity. Because what you're seeing right now is the dollar's strength can also be tied to the fact that the dollar is the economy where the dollar lives is the most liquid economy in the world. So therefore it has the most available dollars for investment, which continues to kind of fuel the whole movement, fuels the economy. I think that if people aren't watching this and they're not understanding how important that deep pool of liquidity and efficiency is in order to maintain a consistent and sustainable economic cycle, then I don't know you can ever teach a better class. Like I'm not sure where that message will can come from. But because economic cycles are cyclical no matter what, I mean, it's not necessarily, I'm not thinking this as a mean reverting thing. I'm just thinking of this, there's a reasonable amount of cyclicality that you can almost count on. And I think for that reason, the dollar has to face some levels of disruption over the course of the next, whether it's 2 months, 3 months, 6 months, a year, whatever it is. I just don't believe they can maintain this level of hyperbolic moves, one directional. I don't see it as, I'm a contrarian. As a trader who's a contrarian with a expected move of almost double what it is historically in currencies right now, I just don't see how the dollar can maintain this level of insanity.
Speaking of levels of insanity, something I noticed this year, especially tracking like SPX pretty closely, there's been a couple periods of time, like prolonged periods of time, where the variance risk premium or implied volatility projections actually came in lower than historic volatility actually was. And that surprises me given the current market. I'm curious if that surprises you.
You are saying that the implied volatility understated what actually happened, right?
Yeah, there's periods of time that I've seen, that to be the case.
So this is very typical for a year that breaks a decade and a half long trend of implied volatility being overstated with respect to realized volatility. So this is actually normalization, and because volatility is a math model, it is mean reverting. And so what you're seeing here is a normalization in process. You're seeing it happened in real time, is that the markets are normalizing. And so we were due to have a year where realized vol was greater than implied, which just means that what actually happened was greater than what was expected to happen. And it's not that the markets actually mispriced anything. but that's what it looks like. But it's just, hey, this is normal. It's just like everything is normalizing. They're averaging out. That's all it is.
Interesting. And do you think that that function impacts your decision on whether you choose to sell premium or buy premium?
Well, I don't ever buy premium, so yes, but it does impact my decision on when to sell premium.
Leads me to a question for you, because I've actually done a couple studies myself on the typical duration where that has been the case for at least this year, because it's been popping up more, where when realized is higher than IV on average in like SPX, how many days did that remain to be the case, something like that, before it reverted again? Have you guys done any studies on that yet? Because I literally would love your guys' perspective on it.
I mean, most of the time. Now, this year has been a little bit weird because this year we really haven't had very much contraction and volatility.
Right.
But, historically, volatility contracts at, almost 3 times the pace that it expands. And volatility also tends to cluster at very low levels. It does not cluster at high levels. So, that we used to say in a bull market, it would be something like 4 to 7 days. But in a bear market like we've seen now, it's very different, and all bets are off. It's lasted in some cases for months. I mean, the longest that we've seen volatility expand, over time is almost like 200 days.
Switching away from trading real quick and more to like a philosophical standpoint, obviously you've been building for a while. You've building a lot. You've created significant success. And for people that have worked with you, what's the end goal? Like, just as your wife said, like, why the fuck are you doing this?
So, well, it's my legacy. I don't have an end, like it's not, I mean, I'm always in the business of trying to prove that I can make money and, prove that I can be successful in trade and things like that. But I'm past that point in my life now. I have everything I need. I'm really I've reached a point where this is about my legacy. I want to be known as, he was a great entrepreneur, and he built some really cool businesses, and I'm very competitive in the sense that, I feel that what we do for finance is very different and very important. And I don't feel that anybody in this industry, and I mean nobody in this industry, has shown themselves at this point willing to carry the torch forward. And so I am very protective of kind of the methodology and the approach that we take to finance. And I'm not leaving until I feel like we're in good hands. Like, I don't feel like the other firms, even the firms like, you say you still use Thinkorswim. I mean, it's a great platform, but we moved on and now Schwab has it. And I don't feel that they, although they protect the integrity of the platform, I don't feel they have the vision that I had at all. And I don't feel that the future, I don't like the future of finance in their hands, even with technology that we built. There's more to it than that. And I feel like, like we're still on a mission here at Tasty, and I have stuff left in the tank. So I want to, it's like, it's hard to explain because people go, well, you could just go live on an island or buy a freaking island. Who cares? Just and do it. I don't, that's not even interesting to me. That's interesting for a long weekend, but that's not interesting to me. What's interesting to me is like this conversation we're having right now. Like, maybe this changes somebody who listens to it. Maybe it changes their life. Maybe it changes your life. I don't know, but it's cool to me that we have an opportunity to tell our story, and that maybe other people can, I don't know, take some of this stuff. Maybe there's some takeaways, and maybe they can say, hey, you know what? If this fucker can do it, I can do it. Whatever it is, I don't know. But like, it's just important that they understand kind of like where we're coming from, and why we're different. And our view of finance, the future of finance, it's very different than the traditional look.
Well, I mean, I can say it definitively that you actually have had a pretty profound impact even on my life. I think I've told you this already, but I mean, I came from a single mom who's working two jobs to just keep the lights on, and I was trying to find anything I could do to try to make some money. And I started trading with a $3,000 account with what I could scrape together, and now I'm fortunate enough, and I've grown it to seven-figure account plus. And literally, that is because of people like you that made me think that it's possible. So I'm actually really just taken aback by that response that you just gave, because it's like very stoic. I don't know if you practice stoicism, but that is like a big tenet of stoicism, which is actually like a communal obligation. Like the if you have something to offer, to continue delivering it to people, which is really inspiring, to be completely honest. It's really awesome to hear you say that.
You know, I know, thank you. And I appreciate that. But at the same time, I don't think of it that way. Like I think of like
Sure.
that like this is what I do. You know what I mean? Like I don't even like it doesn't even
Right.
register with me. You know, it's like I don't even there's nothing else I could do. You know, like
Right.
I don't have it there. Like I'm one people I love when people's one of my favorite questions is when I'm doing an interview and somebody says, "Hey, like what are your hobbies?" And I go, well, I don't really have a hobby. You know, like they're like, what do you mean? Everybody has a hobby. And I'm like, everybody but me. I mean, I go, I don't even know what you mean. Like, I don't really have a hobby, you know, like, yeah, I like hanging out with my friends and doing stuff and but I don't really have a hobby. You know, I don't do anything. You know, this is what I do. I build stuff like, I work, I love investing and building things and getting involved and all that kind of stuff.
Speaking of investing, and you said before that you kind of have most of what you want, I actually wanted to push back on that because I'm not sure if it's created yet, but I saw an interview that you were talking about your newest venture in Chicago, which is your iced tea shop. Is that there yet, or where are we at with that?
Well, actually, I've invested in it's a little bit bigger than that. But the
Uh
iced tea
huh.
shop is my is kind of a front for it. Uh, it's crazy. I love iced tea. So, and I've always wanted a place in my neighborhood. This is not a like, hey, Tom's going to build 700 iced tea stores around the country, and and he's going to own an iced tea franchise. That's not it. This has just been I've always wanted a place in my neighborhood where I could just walk to and hang out instead of like, I don't want to sit in my house. I live in the city. There's a lot of people around. I just wanted a fun place where we go, just hang out and like, talk crap and, meet, meet friends. I mean, we always meet at different coffee shops, me and my buddies. And I'm thinking like, hey, you know what? Let's take our own place. We can afford it. Let's have some fun. And um, so that's it. But it's actually part of a bigger project that I'm invested in with my son and some of his buddies. And it's I'm not gonna get into details, but it's kind of
Sure.
like it's an entertainment technology play.
Got it.
And something, I love helping those guys because they're young, they're smart, and I think I can, even though they don't think I know anything, I think I know some stuff. So I think I can help them, like with some ideas.
Another thing that you've done that I'm actually very impressed by, and I've learned a lot from it, is you do not shy away from new stuff. Like, you're not anti new technology. Some people get really entrenched in like what they use, what they do, what they like, what they don't like. And I found that really, again, inspiring. And I don't use that term lightly. The fact that you purposely hire different generations from yourself to get different ideas, to challenge the status quo. You're doing things like getting involved in cryptocurrency. You talk about that stuff, even though a lot of older investors and traders say, oh, it's all bullshit, it's all fake. How have you cultivated that receptiveness to new ideas, new technology? Because I think it's important, and it's something that I'm trying to learn myself.
First of all, I hang out with a lot of young kids.
Mm,
um, and I try to hire crazy, smart, people from all different generations, but hopefully, we get a lot of young people in here because I need
Right.
that know-how. We have some older people, some younger people, everything. And I'm actually building an app right now for Tasty, which I think is going to compete head on with Webull, Robinhood, M1, and everybody else. I'm building an app right now for Gen Zers that I think is going to change the entire industry, and it'll be out next year. And I think it's going to be one of the coolest trading apps ever. But the key to it is completely the opposite of every trading app ever built, in that it preaches basically, and you're going to think I'm crazy, but I can explain. It preaches, hey, this is an app for you to learn how to lose money.
Yeah, a lot of questions come up there. I think I get it actually, because I like that angle and I like the antithesis, because if you learn how to lose money, obviously you can learn to make money. But yeah, why are we focusing on how to lose money?
I believe in life that some of the most important things we can do to be successful is learn from our mistakes and learn from our losses and learn from our, you even started to talk about it before, like you can kind of tell the character of people and ideas from when things go bad. When things go good, everything's easy. But when things go bad, that's where you can tell, hey, this is the real champion. And so I'm tired of I think we try to handle like an entire young generation with kid gloves and say, hey, you know what? When you're 22 years old, you're just graduating college or something like that. Hey, you should be putting all your money into a 401k and an IRA account so that in 40 years, if you're still alive and we get to take 30 or 40% out in fees, you might have something left, And my philosophy is, hey, fuck that. We should be in a situation where if I'm 22 years old, hey, Tom, teach me how to take risk. Teach me how to do don't teach me how to play blackjack, or poker. I don't care. Teach me how to take real risk, and I'm willing to lose. And if I do lose, I'm going to gain something from it. I'm going to understand something. And I'm sick of all the crazy apps like Acorn and Stash and some robo advisor, because you invest in those when you're 22 and you wake up 40 years later and you're 62 and you don't know anything.
Right.
And I don't think Robinhood, I don't think Webull, I don't think all these other apps for millennials, Public, whatever they are, all the different ones, they don't do it either. They don't understand. Nobody gets it. This is about, somebody has to introduce risk. And I feel like that's my domain. Crazy risk. You be the person that teaches a generation how to take risk. So that's what I'm working on right now.
That's actually really, really cool. Whenever you guys make some progress on it or you're ready to show some of that, I would love to look at that with you all, because that's one of the things that I try to talk to my audience about specifically, is having a trade log at least. And, I don't go super far with it. And I know people like you that are literally doing hundreds of trades a day are not going to fill out a trade log. But I do think at least having a way to review what we're doing, to learn from it, is where we gain most of the value. So I literally love that you're creating something that's really predicated on achieving that. So that, and next time I'm in Chicago to get straight up disrespected by your winner, I'll have to figure out where your iced tea shop is and try some iced tea, because I do like an Arnold Palmer. That's one of my favorites.
Don't think you're getting an Arnold Palmer in my iced tea shop. There's no lemonade in there.
Bring your own lemonade.
Actually, there's a couple because it wouldn't be my shop if there wasn't a couple of gimmicks. So there's a couple of gimmicks. So, but I can't tell you about the gimmicks on air because you're going to have to go there.
Fair enough. Well, I'll also be ready to smuggle in some of my own lemonade if I have to.
Oh, no, you won't have to. We'll have other stuff. Don't you worry about it.
But Tom, we're at time, and like I said, I really respect you carving out an opportunity to chat with us. So thank you so much for hanging out. I'll drop all the links to Tasty Trade, Tasty Works, so all the stuff that you guys are doing in the video description below, unless there's anywhere else that you want to specifically let people know where they can get a hold of you.
No, this is great. I'm just, if anybody has any questions, they want to write me, I'm just Tom at tastytrade, but you can just, yeah, just drop them all, tell Britt, and we're good.
Okay, perfect. That sounds awesome. Let me kill us off. We'll catch everybody later.